Let me ask you this, because I'm glad you talk about governments. Government regulation has been one of the main things that people have always feared. And it seemed like Mark Zuckerberg was in front of the government like every week at one point. Like I'm like, I've never seen somebody in Capitol Hill so much. And I think, to my understanding, that played a part in why Libra never really got off the ground. So
Yeah, Facebook, Libra was a great idea, but Facebook was so tone deaf. Like, you're hated, guys. You are hated. And they went there before they had like repaired their image, and the Trump stuff and the election stuff and your privacy stuff. They hadn't done the work to win back the trust of the American people or the politicians. So he showed up there like a lamb going to slaughter. He could have said, no matter what he said, Republicans were going to hit him. It was the only thing Republicans and Democrats agreed on, is that they hated Mark Zuckerberg.
Yeah, he's not a favorite.
So, listen, Facebook's an amazing company. They've pivoted. They got a lot of amazing people at it. People make mistakes. Mark Zuckerberg is a stunningly smart guy. But the government said, we don't want somebody else running our currency. So Libra was originally its own currency that was going to float, a basket of currencies that would float from that basket. That was like code red for every central bank governor. They say, no, we got to issue the dollars. And so now the new Libra is just a dollar wrapped in a coin. The dollar will still be on deposit at a Federal Reserve Bank somewhere, right? A bank that the Fed controls or regulates. And so it's just basically a payment mechanism as opposed to a cryptocurrency, right? It's a crypto dollar, not a cryptocurrency.
Okay. Well, I'll have another question if nobody else has questions. So can you explain the liquidity situation? Because from my understanding, like Coinbase, they have to get their Bitcoins from somebody, right? In order to actually have them readily available to people to buy them. So where's the reserve for Bitcoin? Is it just guys like you? Like, what's the reserve for Bitcoin?
So the way that the liquidity works, the reason there's this crazy volatility. So in the US, you were talking about buying Caterpillar. So you go to your broker, how much leverage can you get on Caterpillar? 1.5 times, maybe?
Yeah.
Right? 50 cents on the dollar, maybe, if you're a hedge fund, a little bit more. In Asia, you can go to Binance, you get 100-to-1 leverage on Bitcoin. Think about that. That's insane. But all of those Asian exchanges are like casinos. I call it Macau 2.0. And so when you call Galaxy or try to trade at Coinbase, all of the companies like us, we're connected to 29 exchanges around the world. Right? Coinbase isn't really an exchange, it's a brokerage. It's like a Goldman Sachs, right? They got lots of customers, and every once in a while they have enough customers that they can match them against each other. That's a great business. But the real liquidity comes in what I'll call like a black pool. And that black pool is these 29 different exchanges or 40 different exchanges. And so it's perps, and what's interesting is you look at the volume numbers of crypto, they seem giant, right? Binance traded $30 billion on Friday. A lot of that is high frequency guys. Mm-hmm. And so, because I try to sell like $20 million of Ethereum at one point on Friday, because I thought I could catch it before it fell. And I got a shit fill. It was like, 4 or 5% lower. And I was like, how in God's name could my fill be 5% lower, on $20 million when I saw the volume numbers of the day? Because those volume numbers are not real bids. They're HFT guys. They're constantly tweak, and they move that bid. And tell me if, I don't want to speak French when people don't speak French. HFT, high frequency trading, the electronic market makers that create tons of volume, but isn't real deep liquidity. And so crypto has liquidity. We get it from the whole community. A lot of it comes in Asia, and that's where the leverage is. So I would say probably 75, 80% of the liquidity is in Asia. the volatility in crypto comes from that leverage, right? It's not coming from the Coinbase accounts. They don't get enough leverage, right? Not coming from my customers, right? They're not leveraged up.
On the institutional side, if every bank and every hedge fund is going to lean towards crypto over the next 10 years, is the baseline for 7 to 12% annual return going to be dead? Or do you think that regulators will keep it in that sweet spot?
Give me that question one more time, because the returns have been a lot more than 7 to 12%, right?
Yeah, absolutely. But most are only saying that they can get you 7 to 12% for regulatory issues or for reasons. But if everyone is going to lean towards crypto now, do you think from a regulation standpoint that sweet spot or percentage base will be lifted, and now you'll be able to say that you're possibly able to give 20 to 40% return in a year if crypto is added to the balance sheet?
Listen, there's no free lunch in the world. So think about it this way. Here's an interesting way to think about what's happening. There's a pie called global wealth. It's $400 trillion. Let's shrink the pie to US wealth, about $140 trillion. What's making that pie grow right now? Chairman Powell, Federal Reserve, just pumping in money, literally like a guy at the carnival when he's popping the balloons. He just keeps pumping and pumping and pumping. And so global wealth is expanding faster than it ever has in lots of ways, right? And so stocks are up, bonds are up, everything's up. LeBron James trading card traded for $5 million today. I bought one for $1 million. I bought a LeBron James card because I kind of think LeBron James is the dude. Like, I think he transcends athleticism. Like, he is Muhammad Ali of his generation. That guy could be the president of the United States one day.
That's a fact.
And so I thought, I'm not invested in a basketball player. I'm invested in like a world leader. And because of that, that card's going to have value. I got one of his, golden rookie cards. And I thought this was an insane amount of money to spend, and now it's already worth a lot more. That's only happening because we have all this liquidity. So now we've got this pie, like a pizza pie. 12 years ago, there wasn't a crypto piece.
Mm-hmm.
There was no crypto. So crypto's taking a piece of that pie. It's stealing from gold. It's stealing from stocks. It's stealing a little bit from everything. Mostly gold, but everything. And right now, crypto's $2 trillion, right? That's 0.5% of global wealth. Think about that. My thesis is it feels kind of intuitive that in 2 to 3 years, it'll be 2% of global wealth. So that's 4 times market cap. So crypto would be to $8 or $10 trillion. So that means Bitcoin probably is 4 or 5 times higher. Ethereum's 4 or 5 times higher. Now there'll be moves between. And so to me, there's a once in a generation shift to create a new asset class. Asset classes usually end up, something like this will be 7 or 8% of the portfolio, not a half. If you think about commodities or, and so we're in this transitional shift. So I think crypto returns will beat the crap out of stocks but not forever. They will hit an equilibrium, right? There's no free lunch in the world. Right now, it feels like there's a free lunch because the government's losing everything, right? We're winning and they're losing. They're just giving away the money.
Mike, a lot
forever.
A lot of people have compared this crypto space to the .com space of the late 90s, early 2000s, in a sense that there are going to be a lot of coins, just like there were a lot of websites. And so, in your opinion, what do you think? Obviously, we know Bitcoin and we know Ethereum. What do you think are a few that will become the Amazon, the Yahoo, the eBay of the crypto space?
Yeah, it's a great question. We were debating it today. There's this new coin, Solana, that everyone's all hot about. I actually sold some today because it had gone up so much. I was like, okay, too many people are talking about it. It's, sell some, we'll buy it back on a pullback. I think Bitcoin and Ethereum will be there. Everything else, I think it's still too early to tell. Over the long haul. Listen, I love the Terra system, right? Luna coin I bought, I still own a lot of. One of the smarter guys, they've got a great community. But to be honest, 7 months ago, no one had heard of it. And so now it's a $15 billion ecosystem or more. You're like, maybe, let them stand the test of a few years before I say it's going to be there in 10. And so we have this game. All right, what will we bet what discount will I take to buy tokens if I have to hold them for 6 months versus 4 years? And a lot of these tokens, like Filecoin is an amazing program, but they have so many coins that are locked up that will come unlocked. Let me tell you, you're a young guy, you put $10,000 into Filecoin, and 2 years later you get your coins and it's like, hey, it's worth 2 million. What are you gonna do? Sell?
Yeah, take profit.
You're going Lambo. Right? And so when these coins go up, you've got to look at not just the market cap that they talk about, but you got to look at the fully diluted market cap.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.